Okay, so today I want to show you how I trade supply and demand. So I want to show you one simple way you can trade on supply and demand zone. When you are trading, uh, either you are trading a binary option or forex, the market is full of so many patterns. So it only depends on the patterns you are looking for before you can enter the trade. So if you don't know the pattern you're looking for and you just enter the trade, you will find yourself losing your money. Okay, so let's assume that I want to take trade on supply and demand zone. So I'm going to show you how it happened, how I do take trade on supply and demand zone. For instance, if I have if I have a downtrend forming lower highs and lower low, when you are trading supply and demand zone, you have to look for where a big move started. Okay, so that's what I mean by supply and demand zone. So let's say you are trading in the direction of the downtrend, and all what you want to be doing is to take trade at the supply zone or demand zone. So what are you going to do in this kind of situation is what I'm going to share with you. I'll share with you step by step what you need to look for when trading supply and demand zone. So because the market is full of so many patterns, maybe you open your chart, then you are trading on supply and demand zone. Then other trader might be trading on price pattern, while other trader might be trading on support and resistance. So as you that you want to make money in this trading, so you have to pick one or choose one, which one you want to be trading with. Is it the supply and demand zone? Is it the candlestick patterns? Is it the chart patterns? Okay, so how I'm going to show you how I trade supply and demand zone. Okay, so for instance, let's say we have the price here. Let's say in the direction of the trend. So all my trading about supply and demand zone is going to be in the direction of the trend. The price is moving downward like this. So we only have to trade on those strong movements where the strong movement started, just like this. After this pullback, you can see strong movement, a drop. Okay, so here also we can see a drop. So where it started is what we mean by supply and demand zone. Where it all started after this pullback and where it started. So the last candle before the drop is where you can draw your level. It's where you can draw your supply and demand zone. So that drop, that strong drop is what we call the beginning of the strong drop is what we call the supply. Same thing applicable to the demand zone, whereby the price is rising up, rallying upward. So those strong rally, okay, the beginning of the strong rally is what we call the demand. Okay, so I'm going to show you how exactly I trade on supply and demand zone. So here is how I trade supply and demand zone. How I trade supply and demand zone. When you are trading on supply and demand zone, there are two types of supply and demand zone. The one with a base supply and the one with single candle supply. Okay, the one with a base supply, something like this, and the one with single candle supply, something like this. Same thing, the one with a base demand and a single candle demand, something like this. So these are the two types of supply and demand zone that we have. So I'm going to show you how to identify these two types of supply and demand zone. So now, how did I trade supply and demand zone? Either the base or single candle. Okay, so let's move on. If I want to trade a supply zone, I want to trade on supply zone. So what I have to look for is I have to see the price rising, whereby we see the bullish candle started from the support, again a bullish candle. Don't worry, it might be not that it's going to be bullish candle or let's say only bullish candle. You might see some retracement, some bearish candle on the way, but I just use this as illustration. You can also see some bullish candle. Then the market is still rising, okay, and the market reverse. Let's say the price rises to this level and it reverse. Okay, so as the price has reversed, what make the price to reverse? Because of resistance. That means there's a resistance at this level. Okay, there's a resistance at this level. That's why the market reversed after rising from the bottom. The market now reverse. So that means there's a resistance. You know, when you are trading support and resistance, the resistance is also always at the top, while the support is always at the bottom. So once the price rises and reverse, it means the market has reached a certain resistance. Once the price drop and reverse, it means the market has reached a certain support. Okay, so as we can see, the market here has reversed here, the market has reached a certain resistance. Okay, so then after this red candle, we saw a strong green candle to the upside, which tells us that the momentum of buyers is still strong at this moment. Okay, so this is a resistance, we know that. No, and here, know that because of this resistance, we can't expect the market to just reverse. Most of the time the market can reverse, but this kind of situation, I want to show you how to trade on supply and demand zone. Okay, so we have a rally to the upside, the market reached resistance and reverse, but still continue to the upside. So as the market continue to the upside, okay, so let's see what happens next. The market reverse. So when the market reverse, the market reach a supply zone. Most traders call it order blocks, okay, but me, I like to call it supply and demand zone. So most traders call it order blocks, okay. So, and don't be confused. The difference between resistance and supply zone, they're different. There's difference between resistance and supply zone. So let's see what happens when the price reach the supply zone. So this is our supply zone. Let's see. You can see the market start dropping, the market drop, the market drop, the market drop. So you can see the way the market move, and this is a downtrend. So now, how do we trade here? I'm going to show us. Now let's talk about the bullish one. Okay, say for instance, we have a bearish candle forming. Okay, a drop, bearish candles forming, and then the market reverse. As the market reverse, just like this, we have a support right here. So we have already, the market has already created a support right here. So then when the market reverse, we saw a quick seller's entry just to continue this momentum, and then we saw again another seller's entry. So when we saw the seller's entry, we saw a bullish candle. That means the market has reached a demand zone. So let's assume that this is our demand zone. So what happened? Let's see what will happen when the price hit the demand zone. So we can see the market start moving up, start moving up, start moving up. So this is how the price move, the price behave once it touch a supply and demand zone. Don't worry, I'm going to show you on the chart how to identify this pattern. So now let's move on. So how do we trade? How do you trade this pattern? Okay, how do you trade this pattern? Let's say you want to trade this pattern, supply zone. Let's say this is the pattern you want to trade. So what are the rules you must follow? Number one, look at the overall market structure, bearish or bullish trend, but make sure the minor trend is bearish. For instance, if you want to trade here, we look for a major for the market structure, overall market structure. So make sure that the overall market structure, it is a trendy market. But what we want to look for is the minor trend. Okay, the minor trend inside the major structure. The major structure can be downtrend, and also the minor structure also can be downtrend. Okay, so the major structure can be uptrend, then minor trend also can be downtrend. So this is what we are looking for. So look at the overall trend, then for bullish or bearish trend, but make sure that the market trend is bearish. You want to trade this supply zone, make sure that the market trend is bearish. When the market trend is bearish, it's forming lower highs and lower low to the downside. Okay, so that is number one rule. The second rule is look for supply zone. So I will show you how to identify supply zone on the chart. Then make sure that there's a resistance near the supply zone and the price should break the resistance zone. So the price here has break the resistance zone and then reach the supply zone. So what happened? Look for a reversal candlestick at the supply zone. So let's say we see a reversal candlestick, hammer candlestick, hanging man, pin bar, shooting star, inverted hammer, spinning top, doji. These are the kind of candlestick patterns you want to see at the supply zone. So that is how you trade the supply zone. Okay, so let's go to the chart. Let me show you. Okay, so now as you can see, the first rule says a look at the overall trend, make sure that the overall trend is down. You can see this is overall trend, the overall trend is down. Then look for the minor trend. Minor trend whereby it forms lower highs and lower low. As we can see the minor trend here, the market is forming lower highs, lower low, lower low, lower highs, lower low, lower highs, lower low, lower highs, lower low, lower highs. So this is the downtrend structure. So as the market now is forming the downtrend structure, so we have already seen the market structure now that the market is forming a downtrend structure. So what is the second rule? The second rule says look for a supply zone. Okay, so let me show you how we identify a supply zone. When you are drawing a supply zone, you look for a strong drop where the price drop very strongly. You can see that we have so many supplies during this downtrend. We have here, we have here, we have here, all this strong drop, they are supply. Okay, so those are our supply zone. So all those strong drop, they are supply zone. So this supply zone, supply and demand zone, oh shit, I think the network problem. Okay, be right back in a few minutes. Okay, so I think that was network interruption. So the network is bad. Okay, so what I'm saying is when the price is creating lower highs and lower low, we can see some strong big move after this strong big move. So those are our demand zone, supply zone. Same thing, demand. Here we can see a strong big move. Okay, we can see a strong big move. Those are our demand zone. You can see a strong big move. Those are our demand zone. So now here we have identified our demand zone. This is our demand zone. So I'm going to draw it. So here I want to draw a demand zone. I want to draw a supply zone here. So we can see the market consolidate before this drop. So that means this is where I'm going to draw my supply from here, from the close of from the open of the candle of the bullish candle to the highest wick. Okay, from the open of the bullish candle to the highest wick. That is my demand. That is my supply. From the open of the bullish candle to the highest wick before the drop, that is my demand. Okay, if it is only one single bullish, one single demand, one single, sorry, that's my supply. If it is only one single candle supply, it should be from the close of the bullish candle to the highest wick. Okay, so it should be from the close of the bullish candle to the highest. But if it is a base demand, base supply, you include all the consolidations, like let's say the consolidation market, the market consolidated here, then the body of the candle that started the consolidation is where you pick your supply zone. Same thing applicable to the demand zone. Okay, so now I have seen my supply zone. This is my supply zone. So what it is next to do, let's check. Make sure that there's a resistance near the supply zone and price should break the resistance zone. Okay, so here if you look at these charts here, let me use this line. This is why I draw it. That is my supply zone. So if you look at this chart here, if you look at the trend here, we see the market creates a resistance here, resistance here. If you check on the left side, we can see a resistance here. You can see so many resistance here. So we can also see another resistance here, another resistance here. So what happened when the price break the resistance? Okay, this is a bullish movement. That bullish movement is what we can see here as a bullish rally. The market break the resistance, hit the supply, then this drop happened. If you look at it very well, the market break the resistance, hit the supply, and what happened next? Seller center, the market still makes some retracements. Most of the time, if the market will retrace, maybe the buyers are weak, or maybe the sellers, the buyers are strong than sellers. If the market retrace, because we expect the market to go more down, form a bearish movement. But if the market will retrace, it means that the first last candle that formed is a weak candle. That is why the market retrace. So definitely the market, if the market is a strong candle, the market is not going to retrace. So most of the time we usually have retracement. Most of the time we don't have retracement. So in case it depends on the candlestick that form to form a retracement. So here you can see the market drop. Okay, so that is a pattern. That is how you trade in the direction of this trend. In the direction of this trend, okay, the market hits the supply. You can see, and this is also a reversal candlestick, a shooting star candle. Okay, so if you don't know about candlesticks pattern, you can learn how to trade. You can learn how to read the candlestick pattern. So this is a shooting star candle. So you can see the market drop next. You can see the momentum, the drop. Same thing when you want to trade the bullish, the demand. Okay, so that is how you trade the supply zone. Now the demand. Okay, let's say you want to trade the demand here. So what are you going to do is look for at the overall market structure for bearish or bullish trend, but make sure that the minor trend is bearish. Sorry, is bullish, not bearish. Okay, I think I made a mistake here. Make sure that the minor trend is bullish. I make a mistake here. Okay, so the bullish trend should be in form of higher highs and higher low. Then look for a demand zone. Okay, like I said, look for a demand zone. So let's check that. Okay, low. So let's check other pair. Okay, so if you look at here, this is uptrend. If you look at the trend here, the overall trend is up. The minor trend here is up. So if you look at the market structure here, we have a support. Okay, we have the support right here. We have a support right here. We have a support right here. So the market break the supports. Then we have all this demand. This is our demand. See this strong move. That's our demand, 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 demand. So those are our demand. Okay. So now we have seen our supply support zone. So let's draw our demand from the last week of the candle. This is a single candle demand. Okay, not the base. Okay, from the last week of the from the opening of the bearish candle to the last week of the reversal. No, it can be the week can be on this red, it can be on this green. So make sure that is a week. There's a week. Most of the time there's also not a week. Most of the time because market all the time doesn't create week like this to form a demand or supply. So either you see a week or you don't see any week. Make sure that you include the week. The reason why you always include the week is that if the momentum is strong, if there's a strong momentum, the market might not just reverse immediately. It is after once you touch the the week before it can reverse. And most of the time, we always include the week to know if there's a breakout. Once the price break out from this week, and we see that the price that break out, the breakout candle is a real breakout. So if you don't know how to identify real breakout and I have the course on that, how to identify real breakout and false breakout. So let's say the candle breakout and it doesn't reverse. That means the market has totally break out from this demand. So that is why we always include the week. Now we can see the price now has reached the demand zone. The price now is at the demand zone, and this is a reversal candlestick. So what happens next? So what happened next? The market continued to the upside. The market still again facing the demand and still continue to the upside. See that after that we see some retracements. After that we see some retracement. It means that there's no strong bullish, there's no strong bias in this area. But still the market will still go more up. Okay? The market will still go more up. Here I'm using 5 minutes because on 1 minute the chart is not good on 1 minute. So many dojis candlestick. Okay, so that's why I'm using 1 minute. So this is an uptrend whereby we can identify the lower highs and lower low. Okay, sorry, identify the highest highs and higher low. So this is higher highs and higher low, strong uptrend. Okay, this is how you identify the highest and higher low. So don't ever take trade when you don't see the pattern or you don't see uptrend like this, because most of the time some people think strong bullish momentum is an uptrend. It's a rally. It's a rally. Okay, it can then you can stop at anywhere. So this is an uptrend. Okay, this is an uptrend. This is a downtrend whereby you can see in lower highs and lower low. Uptrend, high highs and higher low. So now let's check it out. So finally, as we have seen a supply demand zone, make sure that there's a support near the demand. Yes, we have checked it, and the price should break the support. So look for a reversal candlestick at the support at the demand zone. So now let's check. Let's go and check all the charts and see how it works. So if this is a bearish trend, let's see how it works. Where we can see that this is a bearish trend. Yes, this is a bearish trend, and we have the supply zone here. We have the supply zone. Okay, so the market at times, most of the time, doesn't enter the supply zone or demand. It only touch the edge. Okay, so we have the supply zone. Then we have resistance. This is resistance. So what happens when the price break the resistance? You can see the price hit the supply zone and then reverse immediately. So once the price, this is a bullish rally, the price break resistance, hits the supply zone and then start dropping. Okay, if you want to take trade in this kind of situation, let's say you want to take trade in this kind of situation, let's say on 1 minute expiry time, 1 minute candle, you can just take this put option like 3 or 4 times. Okay, so this is how you can stay profitable in a place put option. So I'm not saying that you should look for. Then if you can, if the market will like to retrace, if the market will like to retrace, it can be maybe there's a momentum also. So maybe the market will also create a momentum. Okay. Then here, this is a 5 minutes candle. Let's check 1 minute. Okay, you can see again, look at 1 minute. On 1 minute, we have a resistance level right here. We have a resistance level here, because this is a resistance and this is a demand, a supply. This is a supply. Okay, this wrong with network now. So we have the supply here. We include this week. So once the price hit the supply, we see the drop. Okay, we see the market start going. That's why most traders always think that. That's why you always lose money, because you thought the market is going up, that you're looking for a buy opportunity here. You are looking for a buy opportunity when the market has already reached a strong level and start reversing to the downside. You might see weak red candle and you place call, you lost. Weak red candle, you place call, the market is still going down. All the call option you are placing, but the market is still going down. You see the market is still going down, still going down. So you might be wondering why the market is still going down, because you don't know the market structure. If you try to identify the structure before you trade, you will know that the market should go down. Okay, you will know that the market should go down, not up. So that is how you trade supply and demand zone. So most of the time, not only two bullish candle or bearish candle will reach the supply or demand zone. So let's not only bearish candle can easily reach the demand zone. Most of the time, it can only be one candle, one strong candle touch this demand zone. Most of the time, it can be three touch the demand zone. Most of the time, it can be four. So it depends on the market structure. Not only to, I just use this as illustration to show you how to trade on supply and demand zone. Okay, using 1 minute expiry time or using 3 or 5 minute expiry time. Okay, so not necessary you only see one candle. Look at this here also. Trying to show you how to trade, how to show. I'm showing you all those patterns so that whenever you come across it, you should be able to know how to trade them. What's going on? Okay, so that one is not a problem. So what I'm saying here is that if you look at this chart pattern here, if you look at the chart here, this is an uptrend. So the uptrend is creating high highs and higher low. Okay, so we look for a breakout from the resistance, whereby we have a support that becomes resistance right here. A resistance becomes support. The market break it. Then we have a demand here. This is where the demand started. Okay, this doji candlestick is a bearish candle. So after this doji, we see strong buying pressure. So that is where the demand started. So that is where the demand started. You can also include this the week here. Okay, so let's see. Now you see the market break the resistance, then touch the demand, then the market fly. Okay, you can see the price movement fly to the upside. Okay, not that the price will still go up, more than that. To just at least make some bias movement to the upside. Okay, if you look here as well, if you look at this area, this is a supply zone. This is a base, because we see some consolidation right from here, some consolidation before the drop. Okay, before this drop, see the market consolidate here before this drop, so we call this a base. Okay, consolidation before the drop. So we call it base. So that is where our supply zone started. So our resistance started from here, resistance here, resistance here also, then the major supply is here because the base is very simple here. This is where the drop started. Because we always see some drop here, but the market still creates some base. It means that the market still creates some base that some buyers can still enter, some trader can still buy the market from here. But from this base, we can see a drop, very strong downtrend, whereby we can see lower highs and lower low structure. So that means the market uh, use this as a major supply. So when the price reach the level, you see the market also drop from the level. Okay, you see a downtrend. So that means if you see this kind of downtrend, if you know that this kind of downtrend is going to form, any trade you're going to take should be in favor of sellers, not buyers. Don't ever think of seeing a bullish inverted hammer to go with buyers on the next candle. Any pattern, any candlestick pattern you trade in this kind of situation will not work. Okay, so because you are trading in a downtrend, so make sure that any pattern you're going to trade should be a bearish pattern, not a bullish pattern, because you are trading in the downtrend. So these are the rules when trading supply and demand. So let's check another chart. I don't know why this my network is just giving me some problem. So you want me to be making videos in this kind of videos? I want to see your comments in the comment section below. Okay. Here we can see the market movements. Up. We have some resistance and some support because resistance becomes support here. Okay. As you can see, they drop small bullish candle. Then after that, they break out from the resistance. So here we have a supply, we have a demand because the markets move. You can see this strong buying pressure. Those are the demand. Okay. So let me show you some of the demand here so that you not get confused. The demand started from here because after the base, you see a strong demand. After the base here, you see strong demand. Then single candle and demand. Okay. So this is our demand, base demand. So after the demand here, after this base, we see a rally. So that is our demand. The demand zone is here. So the market break resistance, and here also our demand zone is here from the base, include the lowest week. That is what this trading style says, include the lowest week or the highest week. If you are trading on supply, include the highest week. If you are trading on demand, include the lowest week. So from the body of this bullish close before the rally and the lowest week, that is our demand. So the market, this is our support. So the price should break the support, then come to the demand zone. So we can see a reversal candlesticks, and here a reversal candlestick, then the market start moving up. So the market just move up for a while just to follow this movement. So we only have some movement to the upside. I'm not saying the market is going to move up higher, change direction. No, at least move up a little bit. Okay. So that is how you trade on supply and demand zone. Okay, this is how I trade supply and demand zone. When I'm trading on supply demand zone, this is how I trade supply and demand zone. Okay, see you guys next video. Bye bye.